Welcome to the 10 Mil Club Standard Portfolio meeting for the 5th week of April going into the 1st week of May 2026.
From the South Carolina Low Country,
It's the 10 Mil Club. It's the 10 Mil Club.
Welcome to the 10 Mil Club Standard Portfolio meeting. Nothing in this video is financial advice. Do not trade directly upon this. Securities that we present may or may not be suitable for you. You'll have your own level and your own willingness to and ability to bear risk. Securities that we own or mention in this video may or may not be securities that we actually own or may be looking at, and that can change at any point in time. And any valuations that you see us do here or in any of our videos do not comply with uniform standards of any or the standards and ethics of any of the valuation organizations to which I am beholden as a business valuer. What is the 10 Mil Club? The 10 Mil Club is an informal group of people who all believe that if we could get to $10 million of net wealth, we would have the financial security that we're looking for. If you are someone who believes that, you're in the 10 Mil Club and we welcome you. With that, let's have just a couple of setup things. So real quick, if you want market overview stuff, go to Dave Keller's Market Misbehavior website or his YouTube channel, either one. Watch his daily videos as the market closes. Chart this with Dave Keller. I hang on his every word, so if you want market overview, macro movement information, Dave Keller is your guy. I will never be able to do it as good as he can. We do our best here at the 10 Mil Club to follow him. And instead what we do is we follow a few small things. For example, here is the put-call ratio for all Russell 2000 constituents. And we're at a 0.33, which means that puts to calls are actually kind of low. As far as puts to calls are concerned, that's a fairly bullish outlook. This is the percentage, it's 1 year of the percentage of Standard & Poor's 500 companies trading above their 200-day simple moving average. And we are above 50%. We're at about 50, looks like about 57%. This is the percentage of S&P 500 companies trading above their 50-day moving average. We're around 60%, I'm sorry, about 55% is where we are, still bullish. And those, and the VIX, we watch because there is about an 80% negative correlation between the VIX and the and markets in general, or publicly traded markets. Standard & Poor's 500 will say. The lower the VIX is, the more up range we can generally consider in the markets. The VIX has been falling considerably lately and is now around 17, which is a pretty placid market, which is a kind of a bullish outlook. And then the MOVE index, which is kind of like the VIX for bonds, ticked up a little bit this week, but not bad. It fell considerably since the Iran war came on. Those are the things that we really like to just kind of very briefly touch on here at the 10 Mil Club so that we can kind of get a mindset as to whether we're going to be more aggressive or less aggressive with our trading. Those kind of indicate a more aggressive trade. And so with that, let's get to it.
10 Mil Club.
We're still watching Borg Warner. This is a year of BWA. We're looking for a nice purchase price, purchase entry point in here. I flip back and forth between 1 year and 1 day. I'm sorry, between 1 year and 1 day and 1 month and 1 hour. So what we're kind of looking for is a buy-in point in this mid-range, somewhere around in here. Might be buying that in the coming week. We still own Car Gurus. This is a year of Car Gurus. We are up 15.44% on Car Gurus as of the close of business today. Today's Friday, May 1st, apparently. So we are up about 15% on Car Gurus, just a regression to the line and then another move up. And so far we're doing okay on CARG. This is a stock we took a flyer on today, and I say a flyer just so you know, we don't just kind of fly off the handle and buy anything here at TMC. We put a lot of thought into it. This one, the reason we took a liking to this is a home builder. There's several. Beazer Homes is one. An alert we had set on this one this week went off, and so the difference between Beazer and Century Communities is that Century Communities actually has a 1-year uptrend to it, whereas Beazer Homes actually has a 1-year downtrend to it. And on this, it came all the way down to this spot right here, and actually, if I'm right about this, 1 month, 1 hour. Right here. So this low right here is 55.31. We did hit a lower low here at 55.10, but it looked like if we traded this correctly, we could get a good move out of this stock. So here's our 1 year back, and from 55.50 to 70 was worth our doing this, or even 65 was worth our doing this. So we bought an installment of CCS this week. Celanese, CE, we're still watching. Celanese, or CE as the ticker symbol, you have to, the whole when in doubt, zoom out thing. So, Celanese went down, 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 down for a very long time. This is a couple of years of Celanese. This is it bottoming out and not being a very beneficial part of your portfolio unless you just simply were a wily trader and traded it very well. But now it's broken above that line and is now heading up. So we're now looking for an entry point on Celanese. That's CE. CMC, or commercial metals, we actually have a limit order in at 68.45. We'll see. We put that in at the very, very end of the day. We're kind of hoping to pick it up in the after-hours session. And didn't happen yet. It closed at 68.66. Monday's always another day. So we put that in there. We'll see what happens. But we like the way CMC looks. Coupang, CPNG. We sold our Coupang at 21.27, really right at the top of this hill, and we're kind of waiting for a dive below this line. Didn't happen this week, but we have an alert set here. We'll see what happens. Dollar General, DG. Now, Dollar General took a real negative move here, and it's human nature to think, well, all right, negative move, I like that. I can really buy it good now. Yeah, unless that's the beginning of something you don't want to get involved in. So we're waiting for Dollar General. It did cross that. We'll go to our trusty 1 month, 1 day here. I'm sorry, 1 month, 1 hour here. Sorry about that. It did cross that and turn, today being Friday. Fridays are always a little bit weird in one way or another. So we are kind of holding out to see kind of what we might be able to see our way clear on Dollar General. We need a little bit of an uptrend here before we really go moving in on DG. ELMD is one we're following. This has nice upward share price momentum. The volume for this is rather low. I don't know if we're going to keep this on the list or not. I've done a lot of research on it. It just has this really super low volume, so I don't know if we're gonna keep that. You're looking at 50,000 shares a day being a big day, so don't know if we're going to keep ELMD on the list. If it just isn't here when we talk next week, you'll know. Edgewell Personal Care, EPC, we traded it unsuccessfully when it did its run up earlier in the year. Now it's reestablished and it's beginning to continue on up, which can't be said about every consumer staples stock, but Edgewell does appear to be hitting higher highs and higher lows, and so we probably will be looking for a buy-in to EPC here pretty quick. EXPD is a freight company, and I believe it's more air and sea freight than anything else. But EXPD, we have an alert. We're looking for a buy-in point along this uptrend right around in here. I believe the alert is set at 147. Let's see, no. The alert is set at 146.34, but that's just something I picked. There's no magic to that. Looking for a buy-in on EXPD. Freeport McMoran, FCX. The copper trade's still on. It just gets overbought and oversold at this point. There's a lot of money chasing it, and Freeport McMoran is kind of, along with Southern Copper, a few others, Freeport McMoran's kind of the big cheese in that area. This is not quite low enough for us to be comfortable buying it here at TMC yet. We're waiting for it to get just above that last low before we make any kind of move into it. We think there's still a lot of upward pressure left in it, but we're waiting for a good buy-in. FDMT, 4D Molecular, we actually bought this week, and we really only bought it on Friday, late in the day, when the stock ended up down in this little area here, and our stop on that is $8.46. We're not giving it a whole lot of leeway. And the truth is, if you take this ATR, this average true range of 0.55506, 0.55506, and you divide it by the share price of $9.09, you end up with 6.1%. That is not a ridiculously high ATR to price range, but it certainly is higher than 5%. And we have to be kind of unforgiving when it comes to trading a stock that has above 5% ATR. Get above 10% ATR to price, we almost can't use the stock. It's too volatile. We do buy them between 5 and 10% though. Regularly we buy them below 5%. So FDMT we bought on this down late in the week. Fox Corp we still own. We're up 7.22% on it. Took a little breather right around in here. We're headed into earnings. Don't know exactly what that's going to do. We'll have to have an internal discussion as far as whether we're going to sell it in advance of earnings or keep it through earnings and just raise the stop. I don't know which we're going to do, to be honest, but we are up 7.22%. FUBO we have to check in on, and the only reason is because we've done lots and lots of videos here at 10 Mil Club on FUBO. Here's 1 month, 1 hour of FUBO. We unsuccessfully tried to trade FUBO once. We had an established uptrend like this. We bought it, immediately had the rug yanked out from under us, got stopped out right there, and our best friend, Creative Ostrich 4066, was shilling that stock on Penny Stock Millionaires Facebook page today. FUBO on the move. You can always count on Creative Ostrich 4066 to be the first to tell you when FUBO makes an up move. And what do you know? Our man did. But anyway, we're leading up. What's happening here with FUBO is we're leading up into earnings, which the news that made it go up was that their earnings will be announced on May 6th. That's toward the middle of next week. So we'll find out what happens there. Dying to find out. I am absolutely on pins and needles to find out what happens, not just with FUBO's earnings, but with FUBO's stock, because I just get the idea something's gonna. Maybe it's a straddle position. If you know anything about options, maybe FUBO is the perfect straddle position. I don't. We'll find out. So healthcare services, only checking in because we sold it high up here at 2316. So far that has been a good decision because of the regression down here. Not looking to buy it at the moment, but just kind of a check back in. KRMN, We bought it at 82.50, set the stop, and got stopped out at 76.24. At the time, we were anguished, of course, but now it's 65.73, a full $10 lower than we were stopped out, and that's why you have stops. So just to check in there. Lose Corporation, L, we're looking for a buy-in somewhere in this area. It's a little high for our tastes, but we love the upward momentum. Here's 1 year, 1 day. We love the upward momentum. We're just simply waiting for some sort of buy-in that's a little more advantageous than being up like that. That's all. But that's L. We bought LMND, Lemonade, this week. This is the only way to really, here's the insurance products, renters, homeowners, building, car, pet, and life insurance products, as well as landlord insurance products. So this is an up-and-coming insurance company, and we saw this point down here. Its earnings were very good, we thought, and understand the market right now is punishing anything for just side eye, so to speak. And admittedly, Lemonade is still working its way toward profitability, but as you stack up their fundamental scan, which we have here at TMC, they are actually moving toward profitability very quickly, and so we took that opportunity to buy some risk right there. So LMND we bought. RIVN we still watch. We are close to a buy-in point. RIVN had its earnings, and they were what analysts consider to be reasonably solid. RIVN is not cash flow positive yet, does not have positive earnings. I don't even believe it has positive operating income yet. But RIVN's a trader's dream, because if you can pick it up at the right price, you can actually get a move in RIVN. We are looking for a buy-in on RIVN in those mid-14s. We're just waiting around for the proper moment. We bought Rollins this week, ROL, and we are currently down a little over 0.5%, which seems to be par for the course for us here. Every time we buy something, we somehow end up just slightly down, but this is kind of a high set line. It was, like we said, it was Friday. Who knows what's going to happen? So ROL, haven't owned it very long. Got the stop set at 54 even. So there we are. We still own ROST stores, ROST. We're up about 1.26% on ROST. Haven't owned it all that long. It's just a slow, gentle upturn, upward trend, and we bought some a little while back and are just holding on to it. Service Corp is new. SCI. This is a death care company, and it's very interesting. It does have really good volume, so we're looking at over 1 million shares as it goes. This is a year of it. If you can pick it up, now you have to contribute your own alpha to this stock. Sometimes that's just the way it is. You simply have to, like with Century Communities, on that one, we do have an uptrend, but it's so slight that essentially we're going to be relying on our own alpha to generate profits on that, which is fine. We look for stuff like that all the time here at the TMC, but this is another one. If you can pick it up at an advantageous price, and we're getting there, we're just not quite there yet. But SCI is one that we'll be looking into. We bought SOFI this week, if you can believe that. Let's go back. Let's pull up 2 years of SOFI real quick. We here at TMC thought SOFI was really on the move in this era right here. This is the late summer to fall, early fall of last year. And we tried trading SOFI, and it just didn't work out for us. We tried it twice, and finally we just all huddled and decided that maybe what we needed to do was lay off SOFI for a little while until we could figure out what happened. And that turned out to be a really good idea, because it crossed below that line, flattened out, and then dove. Well, if you can draw a line, so can everybody else in the world. This is the tariff scare right here with this lower lip. And so down it comes like this, and it touched there, It leapt before earnings, came down, and then buyers moved in. Let's go to 3 months one day. Buyers moved in right there. So the low ended up back here April the 2nd. And so SOFI, even though Dave Keller would tell us that this is not a good chart, and look, he knows more about this stuff than I do, but that's the 200-day moving average. SOFI's below it. This is the 50-day moving average. SOFI's just crossed over it, had just crossed over it when it died at the earnings, and is now below both the 50 and 200-day moving average. And what's the old adage? Nothing good happens below the 200-day moving average. Well, we decided to take, this is as much of a flyer as we at the 10 Mil Club take. We just decided that, you know, if we can draw a line and it can touch back here and here and here, and it looks like buyers are moving in, we're going to take a flyer on it below a 200-day moving average. Dave Keller doesn't say, as far as I've heard him, that that's necessarily something you can't do. He just is certainly not complimentary. He would say this was a bad chart for the time being, I believe. Dave, if you ever watch one of our videos at the 10 Mil Club, A, we would be honored, and B, we would be honored just simply to hear from you what you think about our use of your techniques. TECH is a company that we're now watching. Biotechne has now, that's 2 years, sorry, let's go to 1 year, 1 day, has an upward trend, sold off pretty seriously as we ended up into the year and then involved with Iran, and now here we are, and so we have this kind of advantageous buy point. I believe it still has kind of a high. Let's see, if we take the 2.65841, 2.65841 ATR and divide it by the 55.02 share price. No, we're at 4.8% ATR to share price, so you're not buying an excessive amount of volatility with that stock. So we're watching that. We don't have an order in yet. We still own TJ Maxx. We're up 3.42%. Sorry, TJX companies. We are up 3.42%. If you have not bought your TJX, I'm not telling you what to do. We never do around here. So you do what you want to do. But for us, we actually had a conversation here at the TMC earlier this week. Cannot get that line to do what I wanted to do. We had a conversation where we were like, okay, that's going to turn right down in here. In fact, we were talking about this turn right here. And we were like, well, I mean, do we maybe tactically take an extra position in TJX companies? Because it sure as the world looks, let's just back up to a year here, 1 year, 1 day. Sure as the world looks like you should be able to pick it up, because this high, or that low, is still higher than that low, which is still higher than that low. And that is higher than that, and that is higher than that. And so the stepwise motion that they talk about is completely in place, and we kind of saw this little turn down here, and we were like, well, would you maybe tactically take a position that you could then trade, because 156 to say 168, you know, let's go 157 to 168 is only a 7% move, but on a stock like TJX seemed like a pretty low risk thing. We ultimately decided not to do that, and the reason is because we already have what we consider to be a max position on TJX companies, and as much as we like that company, we would be taking on more idiosyncratic risk or unsystematic risk, however you term that, in that one stock. And so we thought, well, maybe we shouldn't do that. So we elected not to take the additional unsystematic risk by putting that much money in one stock. So moving on, we have to look at TMC, the metals company, because we are the 10 Mil Club, and people truly come here trying to find out about TMC. So we cover it just simply because this is not a good chart. In fact, I really should remove a whole bunch of drawings and things we have on this because they don't really help. But TMC, the metals company, folks, it's a zero revenue company that is waiting for a license from the United States government to begin mining critical minerals and rare earth metals off of the Pacific Ocean floor about 1,500 miles southwest of San Diego, California. And I laugh, at some point this may be the world's greatest stock, but they have to dilute shares because they don't have any other way to make money. And for the moment, we're just not interested in it. No revenue coming in, don't know when the timeline is. Probably need to do a penny stock spotlight with what we do know, but there's a lot we just don't know. We are not looking at buying this right this minute anyway. All right. We do own Vera Bradley though, VRA. This is one of the few penny stocks we own. And as you can see, we are still down 0.97% on it, but we also have progressively higher highs, and it looks like that stock's being accumulated. So we are sitting on our shares of Vera Bradley. Verizon, we're looking for a new entry into. Verizon did that typical leap where all of a sudden the market switches, their earnings look okay, and then they leapt. We did real well holding that through earnings and sold it, and then it came back. Now it's established itself along this line right here, and we're now past their earnings, and their earnings were reasonably good. And so we don't see any reason here why I didn't see any reason why we shouldn't look into Verizon again. And we probably will huddle up here at the TMC this week and see if there's an entry point into Verizon that we really would like to take. I like what I see with Winnebago, WGO. Winnebago is a consumer discretionary company, absolutely, like all the way. Like you do not have to have a Winnebago to live. I don't care what some people claim. You do not have to have a Winnebago just to stay alive. But you can see, I have this salmon, this is some code I have in Thinkorswim that I found online. And I overlaid this salmon channel right here over everything. It goes back 252 units, whatever that is, and this being a 1 year, 1 day chart, it goes back 252 trading days. So we have, you can see an upward momentum to those shares. And if you do a fundamental screen, which we don't do here in the standard portfolio meeting, but if we can get to a deep dive, a weekly deep dive on Winnebago, you'll see. But Winnebago has a lot to like as a stock, and it's kind of down in this little buy area here, so we're considering it here at the TMC. Walmart, we're looking for a better entry. Stupidly, we've been bitten a couple of times by Walmart, and really almost all you have to do in an economy like this where consumer confidence is not great, the job market is slow hire, slow fire, and inflation, we're kind of past the majority of it, but it's still kind of elevated. We don't know if they're going to raise the short-term federal funds rate. We don't know what's going to happen with the Fed. We have a much higher price level now than we used to have. Walmart is not a bad buy in any way. So, in fact, I have a brother, I believe, who just simply bought an installment of Walmart and just decided to sit on it, and that's not really a bad thing to do. Last stock of the day will be YETI. We are actually actively looking for a way to buy into YETI. If we do not this week or next week, it'll probably be gone from the list. And that is the 10 Mil Club weekly meeting for the 5th week of April, going into the 1st week of May 2026. Thank you so much for being here. On behalf of Laura Sue, Will, and Mark Thomas, our engineer and producer, we thank you, and especially on behalf of the 10 Mil singers, Sophie, Hannah, and Presley, and our announcer, Jackson, we will see you next time on the
10